You are tuned in to the 5-Minute Signal, Business and Wealth. I am Vivian Thorne, economic strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here, we do strategy. 5 minutes on the clock, let's get to work. The news today is a cold splash of reality for the global markets. As of this second, February 12, 2026, we are witnessing an unprecedented capital war. The latest reports from the tech hyperscalers, Amazon, Alphabet, Microsoft, and Meta, confirm a combined capital expenditure target exceeding $700 billion for this fiscal year. Most of this is flowing directly into AI infrastructure. NVIDIA alone is captured in the middle of this torrent, projected to absorb nearly half of that spend as the primary arms dealers for the Silicon Age. But while the infrastructure providers are feasting, the companies buying the tools are facing a brutal interrogation from the street. The market has shifted its gaze from the what to the how much. For 3 years, the narrative was about AI integration. Today, that narrative has been replaced by the fundamental gap. Analysts now estimate that to justify the 2026 valuations of these tech titans, the sector must produce an aggregate revenue increase of $2 trillion by 2030. Why this matters to you is simple. The index-blind era of investing is dead. If you have a 401k, a pension fund through your employer, or a standard brokerage account, you are likely overexposed to this capital war without even knowing it. The S&P 500 is now more concentrated in AI-dependent capital than at any point in history. This isn't just about tech stocks anymore. It is about the structural integrity of the entire market. When 30% of all new US corporate debt issuance is now AI-related, the risk is no longer contained to a few labs in Silicon Valley. It is embedded in the very foundation of your retirement savings. If the revenue doesn't materialize, the correction won't be a dip. It will be a structural realignment. The hard truth is one that most experts won't tell you because they are paid to keep you in the game. Much of the AI spend we are seeing today is defensive, not offensive. Companies aren't spending $100 billion because they see a clear path to $200 billion in profit. They are spending it because they are terrified of being the next blockbuster in an AI-dominated world. This is fear-based capex. It is inefficient, it is desperate, and it is often funded by high-interest debt that will strangle margins for a decade. For the individual investor, the day trader, or the professional holding a fund, here are your 3 actionable moves. 1. Audit your default exposure for debt to AI ratios. Go beyond the ticker symbols in your 401k or mutual funds. Identify the percentage of your holdings in companies that are funding their AI capital expenditures through debt rather than free cash flow. In a high-rate environment, the debt-funded experimenters are the first casualties when the ROI fails to meet quarterly expectations. You want to prioritize the efficiency architects, companies using AI to demonstrably reduce their cost of goods sold, not just those exploring new products. 2. Implement a volatility buffer for earnings season. If you are day trading or managing an active brokerage, recognize that the market now punishes AI spend without clarity. We saw this with Amazon and Meta this week. Even record revenues were overshadowed by massive capex hikes. Establish strict stop losses, specifically around earnings dates for companies in the $700 billion spend circle. 3. Prioritize infrastructure toll takers over application gamblers. Whether you are looking at long-term stocks or short-term plays, the safest ground in a capital war is held by those selling the shovels. In your personal portfolio, favor the firms that generate immediate cash flow from the spend, the power utilities, the specialized cooling manufacturers, and the silicon providers, rather than the software firms promising agentic breakthroughs that are still 18 months away from monetization. You cannot win a war if you don't know who is paying for the bullets. I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. This program is for informational and educational purposes only. This content is not a substitute for professional financial, investment, or legal advice. Always consult with a qualified professional before making any financial decisions.